Good afternoon, traders. As you may or may not know, the stock market doesn't care about your math. We all know it doesn't care about your feelings, but a lot of traders use mathematical models to try to predict price movement, and then they base their trade solely on that. And I don't think that's a good idea. If you want to come up with some mathematical model or average and you plan your trade around that, that's one thing, as long as you have a defined stop loss and profit target in mind. That way, if the price action deviates from that model, you are well prepared for that. So here's an example with SPLG. It's an ETF that follows the S&P 500. I am in a swing trade with it right now with my Chase account. This blue line represents my entry, and this is where my stop loss is right now. The price action goes much further, and I'm going to show you that in just a second. But the model that I made was based off of the last time that this thing made all-time highs, or the last 3 times. Here's 1, 2, and 3, and it pulled back to the 50 MA because that's what my profit target and stop loss are based on when the price comes back down and touches the 50 MA. So I also included this one just because it was one other pullback to the 50 MA, but I have both averages here. So I'll show you that in just a second. And then if you want to see what my plan was, it's right here for when I entered this trade on March 25th. So let's move this chart along. And the blue line, the blue curvy line is a 50 MA line. And then this red line was a line that I drew that's just kind of an average trend line based off of the 50 MA line. So I'll show you what all of that stuff means in just a second. So this is actually where my entry was back on March 25th for the break of this daily candle. And then my stop loss originally was the low of this candle. And then each day that the price moved above the 50 MA, I raised my stop loss to the 50 MA. So let's see how this thing is playing out. And I'll show you how the model is fitting the price action. So here's the all-time high of this move. It happened on April 16th. So I basically copied all of those lines that I drew over to this all-time high. And one of them, the purple line, I had to extend, so it's not quite as meaningful as I said before. But look at these pullbacks, these 3 daily pullbacks. If you look at the yellow lines, this is the low end of the yellow lines, and this is the high end. So that's the whole range of the price movement there, based off of those averages. And you see these pullbacks are fitting that model really well. Let me zoom in a little bit. And that green dotted line is the average of those yellow lines. So it's really falling in nicely to that model. So you think if I extend that and intersect it with the 50 MA, that I could predict where this trade is going to end. But what happened today? It broke out of that model entirely. It doesn't care about this model or this average or what it did the last 3 times that it pulled back. This is an ETF, and all it is following the stocks that are in the S&P 500. That's it. So when they go up, this goes up. When they go down, this goes down. Simple as that. So it doesn't have to follow any average or any model or anything like that. So the interesting thing is when we pull this down, the trade should stop here based off of that average, right? Or here based if I include the purple line. But right now it's completely breaking out of that. So who knows where it's going to be, but more than likely it is going to be further along this red trend line, which is a good thing. I'm glad that the market doesn't follow math, because this is going to keep me in the trade longer. The price is going to move higher. I'm going to continue to follow the 50 MA, and I'm going to make more money off of this trade because the stock market doesn't care about math. So it's actually a good thing. Of course, it could have broken out of this model on the back end and stopped me out earlier, but hey, you can't win them all. So anyway, hopefully this video was helpful to you. The big thing here is just always have a plan. Don't just base it off of a mathematical model or a Fibonacci sequence or any indicator. Make sure that you have a plan and you stick to it. And if it breaks outside of that model, then you take your stop or you take your profit target, because it doesn't care about your math. That's it. That's the point. All right, guys, let me know what you think in the comment section below. Hit the like button, subscribe if you haven't already, and I'll see you in the next video. Take care.